Oil jumps as US and allies launch airstrikes on Houthis in Yemen. Oil jumped in early Asian trading as the US and its allies launched airstrikes against Houthi rebel targets in Yemen, stepping up retaliation for attacks on ships in the Red Sea that have imperiled flows of fuel and goods through the vital waterway. President Joe Biden said strikes had been successfully conducted against a number of targets in Yemen used by the Iranian-backed militant group. Radar sites and missile launchers were hit. Front-month U.S. West Texas Intermediate rose 2.1% to reach 73.56 bbl, and benchmark Brent crude oil futures traded 2.0% higher at 78.96 bbl as of by 0127 GMT as trading volume spiked. Earlier this week, the Houthis launched their largest assault to date on shipping in the Red Sea, despite the presence of a US-led naval force. That prompted warnings of retaliation from Washington. Adding to the turmoil, Iran seized a tanker off the coast of Oman on Thursday. Tensions in the Middle East have been rising since the outbreak of the Israel-Hamas war in October, with the Houthis firing missiles at ships on an almost daily basis over the past 2 months. The group has said it won't back down until Israel stops fighting Hamas, which is also funded by Iran. Oil has been buffeted since the start of the year, often moving more than $2 each day, without setting a clear direction. While the fighting in the Middle East has supported crude, concerns about rising non-OPEC plus supply, deep pricing cuts by Saudi Arabia, and expanding US stockpiles have weighed on prices. The UK had warned that action would take place if the Houthi rebels continued their attacks. So this action should not really be unexpected, said Robert Rennie, head of commodity and carbon research at Westpac Banking Corp. Still, the WTI may surpass $75 and Brent could exceed $80, he said. The airstrikes are a gamble for the US and the UK, which have repeatedly set up priority amid the Israel-Hamas fighting is to keep it from spreading. There are concerns from Saudi Arabia and others that such action will inflame tensions. Citigroup Inc. estimates that geopolitical risks in the Middle East have added $2 to $3 barrel to Brent, and that the risk premium may increase substantially if supply disruptions increased. Standard Chartered plc, meanwhile, said that oil is underpriced by at least $10 a barrel. The Houthi action in the Red Sea had prompted many commercial shippers to direct vessels around the southern tip of Africa, rather than risk a passage through the waterway that links to the Suez Canal. That's increased costs.